If you are watching this video right now, it means you are interested in knowing more about investing in the stock market. No matter how many years of experience you have in buying stocks, you must know the feeling of losing money, and the disappointment of buying the stocks at the wrong price and time. Therefore, you have to finish watching this video, as the Whatapedia would present you 4 technical analysis tricks that might cost you thousands of dollars if you enroll in investment courses. Now it is completely free for you to learn these tricks. Before going into the 4 tricks, it is vital to have a brief understanding of technical analysis. To be honest, there are numerous indicators for technical analysis, for example like MACD or RSI. In case you want to know more on these, you can comment down below and we could make another video for you. But in this video, we won't talk about these since we would only require 2 elements for the tricks here, namely the resistance level and trading volume. First, resistance level is the pressure that the stock price faced when trying to move up. To find out the resistance level, you can notify the point that keeps stopping the price going up. You can attempt to draw a line to define the resistance level. Remember, there is no right or wrong resistance level, as it would be subject to your own interpretation, but try to look for those points that the price has met but bounced back for times, then there is a high chance that it would be the resistance level. While for the trading volume, this is really straightforward and you can easily refer to the figures available in your own trading platform. So when we group these 2 elements together, we could bring in the technique covered in this video, which is the breakout trick. What is a breakout trick? Simply put, it means when the stock price breaks through the resistance level, where a sudden increase in the trading volume of that stock could also be noted. Pay attention to details of a good breakout. It has to be supported by the resistance breakthrough as well as a high trading volume. The reason for stressing on high trading volume is that we have to make sure the sudden increase in stock price is fully supported by the market force, where the overall buy and sell trends in the market are pushing the price up. Therefore, this could be the fundamental base for the uptrend in the coming few days, and this way we could possibly make a good profit with this breakout. However, if there is not an obvious increase in trading volume, the successful rate of catching the right breakout would be lower, since it could be just some spontaneous trades which push the price up, or even a trap to get you buy the stock. Subsequently the stock price would probably fall down very soon, as there is no high demand to support the uptrend at all. After all, the stock price is market driven, so what could be better than this trading volume indicator, to increase our win rate of finding the uptrend? Therefore, we would summarize 4 breakout tricks, and demonstrate the breakout signs with real price charts, so you could have a better understanding on how to practice the tricks. Don't forget to take note of our last bonus tip for you, on executing these tricks in the latter part of this video. Number 1. Bowl breakout. The name of the breakout is pretty self-explanatory, meaning the stock price movement would form a bowl shape, just like how the picture looks like here. There would be a slight downtrend, and once it touches the support level, the price started to go up again to the initial point of the bowl, which is the resistance level. Therefore, we would like to catch the bowl breakout by finding that breakthrough of the resistance level in this bowl formation. The longer the bowl shape lasts, it is possible that the breakout is more powerful, since investors might build up their portfolio large enough during the bowl period, which means they would expect to sell the stocks only after making a decent profit. So this may help drive the stock price higher and higher with less selling pressure. Let's illustrate the bowl breakout trick with the chart of Noah Holdings. By the first glance of the chart, it is not difficult to notice a bowl breakout here. Or to be precise, a double bowls breakout. On 13th of November, the price started to fall down and then bounced back to the same level on 25th. This is the first bowl formed here, while the second bowl formation was right after 25th until the day of breakout, which was the 12th of December, it could give us a buying signal here, since the breakout undeniably breaks through the resistance line set by the double bowls, which was at the 30.85 level. And this bowl breakout was supported by high volume of transactions, meaning this was driven by the market deeply. Therefore, we can see this bowl breakout rising trend could make us as much as 20% profit. Number 2. Horizontal breakout. This is particularly common when there are minimal movements of the stock price. So the up and down of the price are mainly within a channel made of the resistance and support level, and this sideway trend is possibly due to similar demand and supply forces in the market, resulting in no particular strong pressure that would affect the stock price hugely. Therefore, when we notice a valid breakout after the horizontal price movement, an uptrend could possibly be seen, and we don't want to miss that. So we would use the chart of Fastly to show how this horizontal breakout works. So you can see starting from mid-November 2019 to May 2020, the stock price is basically in a horizontal movement. By drawing a channel line, you can see the prices are more or less stay within the channel, and with minimal up and down. Now look at the breakout on 27th May. It clearly breaks the channel with a huge increase in the transaction volume, where previously there was just 2 to 5 million on average daily, but on this breakout day it had around 18 million. Therefore, you can see that this horizontal breakout was well supported by the expanded transaction volume, so it is not surprising the stock price keeps going up after this breakout, and even reaching 3 times of the price during the channel period. Hey there! Don't forget to subscribe to our channel, so that you won't miss our life hacks videos. Give us a thumbs up if you like what we shared too. Number 3. Cup and Handle Breakout. Similar to the bowl breakout, this trick will require a cup and handle shape formation in the price chart. The difference between the two breakout tricks is that cup and handle would first have a longer period of U-shaped movement, forming the cup shape, and then it would experience a relatively short period of pullback, which could be recovered very soon by a rebounds, which is the handle shape. This could be ideal as the handle could demonstrate a sign of strong buying force to recover the downtrend, and if this is followed by a good breakout, the uptrend could be really strong. Let's look at the chart of Zoom. From the stock chart of Zoom, we can obviously see the rising trend in early February 2020, but before that, a cup and handle breakout sign could actually be identified. When we look at the stock price, it started to drop from the end of November, but the price slowly rose back to the same level in mid-January, which forms the cup here. Yet another short up-down-up pattern was noted soon after forming the cup, which means we can regard this as the handle of the cup. Therefore, with this cup and handle pattern, we can identify the resistance level line, and the rocket increase in the stock price on 3rd of February could absolutely define the breakout. Don't forget the transaction volume also supports this breakout very much, and hence it is astonishing to see the uptrend in the following days, or even months. This is how this cup and handle strategy works in general. Number 4. Flag breakout. This would be more like an after breakout sign, because the formation of the flag shape is the normal pullback after breakout, as some investors would sell the stocks after sudden increase to secure profit, but this pullback stage should not be long, and the trading volume should not be larger than the one on the breakout day. So a nice flag would only last for a few days, and will very soon continue the uptrend. There are 2 reasons for figuring out flag breakout. First, it could be the time you increase your investment on the stock, if you only put in a little at the breakout point. Second, this could be the chance for you to catch the uptrend, if you miss out the initial breakout point. Let's take a look at the chart of American Tower. So you can see there is a kind of breakout, when we look at the resistance set from August to mid-October 2018. On 30th of October, the stock price had increased more than 5%, and it formed a breakout obviously. The transaction volume is more than 2 times of the previous average daily volume, so this may be a good sign. However, you can see after this breakout, the price somehow dropped for 3 days, which formed a flag-like sign. This situation is what we have just mentioned as the normal market reaction, where people will sell the stocks after a big increase, and given this flag only consists of 3 days, and it resumed the rising trend afterwards, this may be a good time that you want to go into the market with a lower price, as you can observe the long uptrend later on after this flag. Last but not least, you need to have a good mindset. It is not uncommon that people would pray for the stock to bounce back when it starts to drop, but this actually is a really bad thing for investment. Not only would you lose your money, but you are also wasting the time and opportunity that you could have spent your capital on catching another uptrend stock. Therefore, always invest responsibly, and set the cut-loss point before executing any trades. Mindset is way more important than the technical analysis tricks we talk about. So if you want to train up your mindset just like the rich and successful people, go check out the Millionaire Mindset program in the description box down below. Remember, the tricks we shared may win you thousands of dollars, but with a poor mindset, you could eventually lose more money than you earned before. Mindset is of paramount importance pertaining to stocks investment. Thanks for watching. If you enjoyed this video, please leave a like and comment. We would appreciate your support a lot. See you in our next video. Cheers.